Tesla shares are continuing their 2020 run this morning. They're at a record again. And that's after, as we learned, the company almost just missed by a hair its target for deliveries last year, just under 500,000 cars being delivered by Tesla, 499,550. And that was good enough for investors. Most of the time, Tesla's news is good enough for investors. You know, one of the things that actually propelled the stock last year was shorts getting squeezed out. There was an estimate, I think, from S3 Partners that there was about $37 billion in shorts getting squeezed, losses related to shorts getting squeezed for Tesla. And you have to wonder what momentum is going to be like in 2021. You don't have that same massive short interest that you had last year. You know, this is a question, obviously, for a lot of companies this year. And Tesla, after such huge gains last year, is definitely going to be on that list to see if it can maintain the huge steam that we have seen for the company already.
Yeah, I mean, I think what's interesting about Tesla is the way the stock performed relative to the company's good and improving fundamentals, but still fundamentals that were, in line basically with the company's expectations. If you go and you look at sort of what Zoom did, and it's interesting, Zoom sneaky 35% off of its highs here. I mean, Zoom's reporting, hundreds of percentage points worth of growth on the top and the bottom line. Yes, Tesla is growing at a nice clip, but to come in line with expectations off a year in which the stock was up 700%. I think, Julie, it has to speak to some of those dynamics around kind of who owned the stock and who was betting against the stock. Now, there's been several periods in Tesla's history where that has come up, and that's been the primary driver, the marginal bid, as it were, for the stock. And, I don't think we can, I don't think we should be surprised if that comes back into play. It is, after all, a $700 billion company that sold about $500,000 cars last year. So we can do the math on how much market cap is being implied by each year of 12, each car that was sold over the last trailing 12 months. And so, look, I mean, it's a fascinating story. It'll continue to be a fascinating story. It was the biggest markets story before the pandemic hit back in February of last year. And I'll be very interested to see, with a lot of new competitors in the space and a lot of hype around a lot of other names, where the Tesla specific story goes from here, Sozzi.
No, Myles and Julie, where the surprises are coming from and where you are seeing a lot of momentum and perhaps the street's still not understanding the story is demand in China for electric vehicles. Outside of Tesla releasing its sales number this weekend, you had NIO come out, reported for the 9th straight month that its deliveries doubled year over year. XPeng just came out. Its deliveries in December rose 326% year over year. Li Auto deliveries up 530% year over year. And Tesla, again, I retweeted this on my account. They just started selling the Model Y in China, and their dealerships have been packed. So that only fuels the story. But a moment of caution here, though. You look at some of the price-to-sales ratios on these names. XPeng, 56 times trailing sales. Li Auto, 86 times trailing sales. NIO, 30 times trailing sales. These are super high growth valued stocks. And any sign of a slowdown of any kind in coming months will not be met kindly in this market. That's just the bottom line here.
You know, you were giving the individual delivery numbers for them. The overall number for China is also really interesting. Pure electric vehicle sales up 4.4% from January through November. That's even as non-electric vehicle sales, just conventional passenger car sales, down 7.6%. So this was really a bright spot in the auto market in China. And to your point, we'll see if these guys can keep it up and if that kind of demand is going to keep up and spread even more here to the United States as well. We shall see.